Look at a typical Forex chart, and you will see a storm of volatile data. Traders often struggle to distinguish a building trend from the sideways noise of a range-bound market. Standard momentum indicators focus on the vertical y-axis, calculating how far price moves to determine strength. But this reliance on vertical distance creates a trade-off. Requiring a significant price move to trigger calculations means they often react after the market has moved. By the time a traditional indicator confirms a trend, the initial momentum has often peaked, leaving traders to enter a position just as the institutional move is concluding. In 1995, analyst Tushar Chande introduced the Aroon Indicator to address this. The Aroon measures one specific metric: how long it has been since the price reached a new high or a new low within a set window. This method allows a trader to observe a shift in market psychology as it happens. When a pair fails to hit a new high for several days, the indicator registers that cooling interest immediately, regardless of how small the price fluctuations appear. The Aroon has two lines, up and down, oscillating from 0 to 100. If price hits a new high in a 25-day period, Aroon Up jumps to 100. If time passes without new lows, Aroon Down decays towards 0. This creates a visual representation of the tug-of-war between buyers and sellers. It tracks which side is consistently capable of pushing the market into new territory. By monitoring this time-based decay, you see whether current momentum is sustained by new activity, or if the trend is beginning to stagnate. These interactions form three primary patterns. The first is the crossover, which marks the point where the market's bias is officially shifting. In a bullish crossover, Aroon Up rises above Aroon Down, suggesting a new uptrend. In a maturing trend's 100-level bounce, the blue line is pinned at 100, while orange sits near 0, making minor pullbacks common entry points. However, lines can move in a way suggesting the market is losing direction. When both lines drop below 50 and move in parallel, the market is in a consolidation phase. Lacking new extremes, it's a flat market where trend-following strategies fail. Recognizing these geometric shapes allows a trader to distinguish between a trend that is building momentum and one that has stalled into a range. This differs from the average directional index, or ADX, which is often used as the standard for measuring trend strength. The difference lies in the inputs. ADX calculates trend strength by looking at the vertical price gaps between highs and lows. Aroon ignores those price gaps, looking only at the time elapsed between those points. Because Aroon doesn't require a specific price distance to be covered before it resets, it often highlights a change in market direction earlier than price-sensitive oscillators. This speed makes it a preferred tool for traders who want to identify a new market cycle at its earliest possible stage. The sensitivity that makes Aroon fast also makes it susceptible to whipsaws. In choppy, sideways markets, the lines can cross frequently, generating false signals that lead to losing trades. To manage this, many traders pair the Aroon with volume indicators. This ensures that a new crossover is backed by a surge in actual trading activity rather than a minor price flicker. You can also smooth out the indicator by increasing the standard 25-period lookback. This reduces the number of signals, but ensures the trends you identify are more established. The Aroon functions best as a measure of market tempo. Like any timing tool, it is most effective when used alongside price action to confirm the weight of the move. Mastering the Aroon requires a change in perspective. It forces you to treat the time elapsed between market extremes as a primary indicator of buyer and seller conviction. Stripping away minor price noise clarifies whether a pair is building momentum or simply fluctuating within a range. It shifts the focus to the consistency of new price extremes. Open your charting software and apply the Aroon to a major pair like Euro-USD. Watch for the next crossover on a demo account to see how a time-based approach can help you identify trends as they begin to